In the short term, clearly there has been an avalanche of liquidity from not just the Fed, but from all central banks. One could make the argument that the Fed's expansion of liquidity into the credit space seems a little bit surprising. I mean, if you look at U.S. investment grade issuance, we're at over $1 trillion year to date, which is 100% ahead of the pace of 2019, and credit spreads have been narrowing. So the Fed is really getting very, very aggressive here in the short term. What worries us more medium term is that at some point that stimulus will have to be either turned off or normalized, and we go back to the underlying economic fundamentals. But again, in the short term, the market is saying the Fed is more important than the economic uncertainty.
Right. Is that why then you're cautious on the markets over the third quarter? Do you expect to see a wind back perhaps coming that soon?
So it's a good question, Matt. Our caution is less about expecting a significant retracement or a dramatic sell-off. It's more about the fact that in some places, whether it's U.S. credit spreads or some other markets around the world, we've seen such a dramatic recovery in Q2 that the pace of gains from here should stabilize or slow down. It will be very hard, in our opinion, for the stock market, for example, to continue to log 40% gains on a quarterly basis. We just don't think it's realistic to expect that pace to be sustained.
So if you're cautious, where is it, the United States, or is it broadly the Asia Pacific as well?
So look, the economic fundamentals for Asia in many ways still look like they have a number of silver linings. Inflation remains extremely low. Central banks still have the ability to ease monetary policy in more traditional ways, i.e. cutting interest rates. The currencies have stabilized, and with low inflation and stable currencies, you can argue that capital will come back to emerging markets. Now, so far, most of the rally that we've seen in Q2 has largely been about developed markets. So I would argue that the value for Q3 or the catch-up plays are in a number of the emerging market assets that have been beaten up in Q2 and late Q1 and have yet to catch up. So that's, Asia actually looks relatively attractive from that point of view.